we are going to begin the journal recap for this week. All right, so let's look at our scorecard. Last week, I had a bad week, and I dug myself a hole. I went into deep drawdown on my account due to having a poor mindset and an inability to manage risk. Those two things combined put me into a serious drawdown on both the personal account and the account, the challenges. So as you can see here, last week, I experienced more L's than wins. And keep in mind, we define the W's and L's in regards to process and not money. And the process includes, for my journal, mindset, market structure, being able to identify the proper mind structure. If you identify the wrong market structure, you'll be taking a trade in the wrong place, and your chances of that trade working out are much smaller. So we want to increase our probability of winning a trade by understanding market structure and where we're at in price action. Risk management, critically important because it makes life very difficult to get yourself out of a hole. And a lot of times what you'll find yourself doing, if you're like me, is scaling up when you should be scaling down. And then last but not least, you can have good market structure. You could be in the right zone for the trade, but misread price action, and that could be detrimental as well. So I'm not going to review every trade I took. I'm going to review the ones that I thought had the biggest impact in terms of understanding market structure and price action. So this week I'm doing far better this week. But because I put myself in that deep drawdown, now I have to work with a maximum of 60% as a daily, $60 as a daily loss limit. And as you know, that doesn't give you a whole lot of room for error. You got to go in the right place. If you don't, you're going to get stopped out. So you got to be on your game for when you have a small stop loss, because you can't afford, when you're in deep drawdown, you can't afford higher contract or larger contract sizing or more drawdown room. You can't afford those. So you have to decrease your stop loss so that you can afford the trade without putting yourself further into a hole. And when you're in deep drawdown, you're just going to have to take your time to get out of it. It's not something, it happens quick. When you miscall a trade and you have either over leveraged or you've moved your stop loss and you've created a big loss, a big drawdown, it takes a lot to get out of that. One of the reasons why I chose $1,000 is because I believe that most prop firms will give you $2,000 for drawdown before you lose the account. I'm trying to prove that $1,000 is you can pass a challenge with $1,000. Not the way I'm doing it right now, but if you go in smart from the beginning, you should never ever need $1,000. You should never hit the daily max loss limit. So phase one should be smaller stop losses, maybe like $120 as your personal daily loss limit. And if you hit $120, stop. Just have the discipline to get up and walk away. Okay. So that's one of the things that I'm working on and I'm struggling with, but I'm working on. Come back another day. There's always going to be another trade another day. But if you take that $120 and now you say, well, and I've done this. Now I can get it back. I see where the price is. I see what it's doing. Let me double it. Maybe let me do $240. And then you lose again. And then you say, well, let me just go to $300. You're digging yourself a deeper and deeper hole. I used to have a boss that said, first loss, best loss. Take the first loss, the first max draw, personal drawdown, walk away, come back tomorrow, and scale in and get that money back. Sometimes you may not even realize it, but your mindset might have left the building. Okay, and you're here trading with your emotions, and that is absolutely the worst thing you can do, is trade with emotions. So that's the story for last week. This week, I am trading more like a grown-up. So I'm struggling still to get out of that drawdown. I mean, $60 is not a lot on one contract. That's a 30-point move, and I'm out from the beginning of the week. Okay, let's look at the beginning of the week. In the beginning of the week, I sort of split. On Tuesday, I took 2 trades, and over here is the win-loss ratio. Out of these 4 trades, won 2, lost 2. On Tuesday, won both. On Wednesday, won 4. Lost 1. Okay, all shorts. Okay, so my bias obviously was going short. The analysis, and by the way, I'm sort of changing my program, my trading plan. I used to start from the week and did a top-down analysis from the week down to the 4-hour. I'm learning it's not necessary for me. I'm going to start with the 4-hour, see what the trend on the 4-hour is doing, and then try to figure out which way I'm going to lean. Am I going to lean more towards, going long? Am I going to lean more towards going short or neutral? If I'm neutral, what that typically means is that I'm in a range. And since I am a trend trader, that's somewhere where I have to be very careful, because finding market structure in a range is very tough, and I'm not good at it. So, maybe in the future, if I do my analysis and I figure that 4-hour time frame is ranging, maybe I should just stay out until it breaks out of the range, and then try to see if I can find a trend to surf on. So I'm working with that right now, but that is something that I've noticed. The this day here, Wednesday, that was ranging, I actually didn't do too bad. I won 4 out of the 5 trades for that one. Today was somewhat the same situation. However, I didn't do as well as I'd like to. I took, looks like 8 trades. Won 7. I'm sorry, I wish I won 7. Won 5, lost 3. Okay, so that was today's trades. I found that there was big news at 8:30. I believe it was consumer price index, which I don't trade news. I don't want to get slapped. We don't know how the market's going to respond to news. We can sometimes anticipate, but it's not worth the risk. So I saw that move, and then after that, I said to myself, based on my experience and my observation, NASDAQ typically has, if it has a big move in the morning, after a really big move, some traders say you should wait till price equalizes, basically between the range of the top and bottom of the news, the big move. You should wait till price comes to a medium before you start trading again. Let price equalize. I don't know how good that information is or not, but what I do notice is that there's a tendency for price to get manipulative, and there's a tendency for price to start ranging after a big move. Typically, before a big move, price tends to range. After a big move, price tends to range. That's what I've observed. Don't take my advice as rock solid. That is the problem with my experience with YouTube. I listen to YouTubers. The most important thing for you to do is back test. Prove what the person tells you on YouTube is either correct or incorrect. Because you have to do your due diligence on the information that you receive to certify that it's good and correct. I'd say at about 9:30 or 10, close to 10 o'clock, I did a mindset check. And truthfully, you know, I had been trading from 2:30 to about 4:15, actually 5:15, and I was pretty tired. And that's another thing. For me as an individual, when I get tired, I tend to get emotional quicker. So being tired is not a good place for me in terms of a mindset check. And two, I saw the charts and I was like, I'll get smacked. So I decided to stay out. All right, so without further ado, let's go ahead and look at the trades that I selected for us to go over. All right, let's get into it. So this is the analysis before. This is on Wednesday. And this is my analysis. This is the 4-hour time frame. And you definitely easily can see it's ranging. Okay. So what that means is you got to be careful. I mean, it could go up, it could go down. It's ranging, you know. So when volume kicks in, you better be on your P's and Q's with this, because the market structure in this range is looking like this. And good luck finding the pullback in that mess, okay? And I typically look for my setups on the 5-minute time frame, and I try to hone in on the 1 minute to try to get more of a sniper entry. Here's one thing I discovered this week. I talked to you guys about the zigzag indicator, and you can see that zigzag indicator going. You can see that line tracing the market structure. Okay. What I've discovered this week is that you have to be careful with the time frame. You cannot look at zigzag on every time frame and take it as correct. So you have to check your zigzag, because you can input the swings, and depending upon your time frame, like say for instance, let me see if I can find an example. Okay, if you change the swings, okay, what could happen is that the swing would take this low here, go up, take that high, low, and then go down here. So the number of swings will either include that swing high and low or not. What you have to do is study market structure to determine whether or not you would go up in swings or down in swings. Okay. All right. So here's something here. This zigzag considered this a high. And here's why I believe it considered it a high. Let's take a close look at this. So you can see that this swing high here, okay? A swing high is the candle in between two candles that has a high point, okay? This swing high put a body on this swing high. Can you draw a straight line, bruh? Okay. Let's try it again. There's a body put on that swing high, candle body, okay? Which makes this high right here significant. But it's not the highest high in the run. So the significance of this body being taken is passed on to this high, okay? Let's do this. Let's go back to the pen. Is passed on to this high. So this significance of this body being placed here is now placed on this high. Whenever you have a significant high, you have to consider the low that it puts in. So this high creates this low, okay? Automatic. Even though this is not a significant low because it didn't take out a swing low, but its significance was made by this high. And that was created when this body was closed on. So that's understanding market structure, okay? So now, this is really interesting. Okay, zigzag made this a significant high. Now, I would look at that and interpret that as, nah, that's not really a significant high. Let's go back to the significant high is where a body was placed on it. So the next high, in my opinion, okay, and you have to do your pack testing, you have to do your own due diligence, is this one. The next significant high is this one, okay? The body was put on this high right here, okay, which made this one significant. So there's an extra swing in here that's not necessary. And if you consider that as a zone you can trade off, you're going to be wrong, in my opinion. So this, I can't find black, but this market structure should go from there to there. Okay, it should not zigzag between here. So you have to fine tune those swings. You can't fine tune them if you don't understand market structure. All right, so you got to double check your zigzag, because your zigzag could mislead you. If you are misled and you're put into the wrong zone to take the trade. And remember, we are taking the trade in the pullback, right? So if you go up, come down, go up, come down, go up, we're taking the trade as the price is leaving the pullback. And this is what we call the zone. Okay. All right. That's more than I had planned to do on market structure, but I think that was important for me this week because in my journal, I noticed that I was having problems with making sure that, and I had to take an extra minute. And when you're trading on the 1 minute time frame and you're not sure that you're in the right zone, you probably should stick it out. Stay out of it. Stay out of the play. You know, coach, pull me out. I'm not sure about the play. You know. Okay, so let's take a look at the first trade I took. All right, this is kind of an example. This is a really good example. This is a range. Where's the pullback? It's really difficult to identify. Now, fortunately, we have here a reversal. Fortunately, we have here a reversal. That'll help you. And we are on the 1 minute time frame. That will help you pick a zone. Now, it's still very hard to pick a zone because you have to pick the relevant zone. And if you don't pick the relevant zone, and I'm not going to tell you what the relevant zone is here because back test it. This trade was taken at 5:38 on Wednesday. Okay, so it's NASDAQ. So go to 5:38 on Wednesday and see if you can find the zone. So let's see what happened. Prices ranging. Whenever there's a range, I typically try to look at the high and the low of the range, and I try to put a box around it. Between the 70 and 30% for me is a no trade zone typically, unless I see a reason like this reversal. Then I feel comfortable. As you can see, my trade was, and obviously I was off sides here, right? The reversal means we're going up, and I took a short, so I messed up. And I moved my stop loss. Should have been at the back of the zone, wherever that was. You'd have to figure that out to protect capital. And I moved the stop loss, and as you can see, not good. Now, if I was expecting the price to move down, there should have been a body put on this swing low. That would be confirmation that price is heading down. And as you can see, it only got swept, and nobody got put on. Nobody got put on it until right here. Okay. And that's when it decided to fake you out. It put a body on it, but it turned right around and you know, cooked. So in ranges, lots of fake outs. That's why it's smarter for me to stay out of ranges because I don't know how to handle it. Okay, so that's that trade. This is the analysis for today. Very similar to yesterday. Price is ranging. So not my favorite time to trade. My favorite time to trade is when there's a trend like here. Up, pull back, up, pull back, up. That's where I love to trade. Okay. Or down, pull back, down, pull back, down. But this crap here, that stuff takes me out. So I'm getting better at it though. I'm getting better. I just got to be super careful and kind of wait till I see enough structure that I can feel comfortable, or a reversal, or something that I can feel comfortable getting involved. Okay, so let's take a look at the first trade. This trade, I actually went long. What happened here? Looks like, let me see. All right. I couldn't even find my trade. It's hilarious. All right. This is my trade right here. That's my little bitty trade right there. Okay. I think I made $1 on this trade. At least I didn't come out negative because as you can see, I was in the thick of a range. You don't want to be there. Trust me. And yeah, bad deal. Okay. So the trade I should have taken is the one you see. That's the one I should have taken. Okay. So the trade I took was at 246 today. The trade I should have taken was at 3 o'clock. Let's see if we can zoom in on this. And I'm not going to kind of describe what a reversal pattern is. I'm going to show it to you. And that's another one of the things that I like to trade are reversals. It's like right there, but I'm going to take it off real quick. You can pause the video if you want to. This reversal pattern tells you that price wants to move up. Price is moving down, and this reversal pattern will take you up. Now, where you get in is where you want to get in. You can get in right. You can get in anywhere. You can get in wherever you feel comfortable. Okay, and you figure out where to place your stop loss. All right, so let me tell you why I think this is important, because I've been struggling with targets and stop losses. Been struggling real hard with these. But I want to show you some price action that I think is important. Okay. All right. I have found that my anxiety level with pullbacks is really high. I hate it when a trade is moving back on me. Okay. Here's what I discovered. Look at this, and I need to try to speed up, so because I'm getting too winded. Look at this low right here. All right, let's count them. We got 1, 2, 3, 4, 5, 6, 7, 8, and one that really threatened that low. 9 really threatened. But any one of those candles could have come down and taken out that low, but they all respected it. That low is the big dog in the picture. Okay. All right. So given that, maybe the safest place for a stop loss is right here. Okay. So, if you look at it here, look at what I'm risking. I think the stop loss that I ended up picking for the one that, this one here is the one that attempted to take, and it didn't even get taken. So I think what I'm looking at is right here as my stop loss. Look at that. I'm in one contract. It's $7. I easily can afford that with a $60 daily loss limit. It gives me plenty of time to take another trade. If I lose $7, I'm in the game. I can take another trade. Look how the trade, and I picked the right, in this hindsight 2020, I picked the right target. Okay. Back testing will tell you after a while what kind of targets that NASDAQ goes for. There's a list of them. There are unmitigated swings, unmitigated zones. There are fair value caps. There are, that gives you an idea of what kind of targets. And you got to know NASDAQ like you know your wife, your girlfriend, your boyfriend. You got to know what they like to go after so that you can give them that. here you go, here's some chocolate, you know, and that's NASDAQ. NASDAQ has its chocolates, you know, swing highs. It loves liquidity. If you see like, you know, lots of liquidity, it likes liquidity strings. So if you see like lots of stops, you know, if you see lots of buy stops in a row and they're on the angle, NASDAQ loves that like chocolate. It's like Pac-Man. It'll just eat all of those stops up. So you got to figure that out through back testing. And then that way you can learn how to better place your targets. And I would also recommend that if you have the golden target and you have that's a good trade target, and then you have the one, if I can get there, I'd be happy. Pick the one in the middle. So if price starts to take the one that's an okay deal, and then it comes back, you can stop it before it comes back too far. But if it goes for the one in the middle, basically you hit somewhat of a home run. The one at the very top, I typically don't get those, but I typically get the one that's in the middle sometimes. So anyway, that's the story on picking targets and so forth. Let's go to the next trade. Let's see. I was actually in this trade, 311. No. Okay. Well, unfortunately, I did not. I was in this trade, but I think what happened for me is I freaked out because I had what I would call a liquidity grabber. Let's take a look at this. And I'm not really going to go into where I was, but this is the trade that I wish I took. Okay, I didn't get this trade, but here's how I would, hindsight being 2020. You see my target here was a fair value gap close. Okay, and I was in the trade in this area. What did I win or lose that? Let's see, 311. I lost it. And here's the reason why I lost it. As you can see, price moved up into profit. Price moved up. You stop it. Stop it. I'm trying to write. Okay, price moved up into profit. Now, all of a sudden, it started coming back on me. I saw the lower lows forming. Okay, then it went back up into profit right around here. And I said, you know what? I don't trust this thing. I just got antsy. So my original stop loss was down here, $12. Just $12, bro. You can afford that. Okay, that's 4 more chances. 5, maybe. Let's say 5. 5 chances. I get antsy and I move my stop loss up to an $8, just $4 difference. See, now we're messing ourselves up. We're shooting ourselves in the foot right here. Find a low, and I'm on the 1 minute time frame. Find a low that has been inspected. You got I'm on more colors. Let's try this green here. All right, let's try that. You got this candle. You got this candle. Oops, too far. You got this candle. Didn't take it. Didn't take this low. Respected it. You got this candle. Didn't take this low. You got this candle. Didn't take the low. And if you just be patient, you would saw that or I would have saw that candle. Didn't take that. So all of them are respecting this low. Okay. So the low that took me out was the original one, this one right here. That's the one that took me out. Had I stayed where I was supposed to stay right here, look what this trade did. This trade was a 20-point trade. It would have made me $80. Not enough to buy a Lambo, but enough to get me out of this hole that I dug for myself last week, right? Let me get my pointer in the right place. Okay, enough to get me out of this hole that I dug for myself. You know, that would have been a substantial amount of contribution to the hole I was in. All right, let's look at the last trade. All right, looks like this one was 343 today. Yeah, I dropped the ball. I fumbled on this one. And this is where I got locked out. This is where I hit my daily loss limit. Okay, screwed it up. All right, I'm just going to go over this briefly. Took the trade here. I was offsides. What does that mean? That means that price was trending upward, but I didn't read price action properly. So if you look at, I did not wait for confirmation. And Dave talks about this a lot. You got to wait for confirmation. If you don't wait for confirmation, you're going to get cooked. Okay. What is confirmation? The swing high in this case is right here. And it was swept, but there's no body on it. Okay. So what you want is you want a body, okay, on it. You're going to have, I don't have enough colors. Let's see if I can go here. Get this color. You're going to end up having a fair value gap right there, right? And you've got a swing high that is right here. So your what you want is you want to pull back or retest, and NASDAQ will either cover the fair value gap or hit the swing point, and then it's going to turn bullish, right? So once it goes down, it's bearish. And then once it swings up to where the price opened at, it's going to be bullish. Okay. And then you want that continuation bullish. Now, you got to put a body on it. And since it did not put a body on it, that's telling you, and it put a body instead, and this is reading price action, on that swing low. And now you've got, once you put a body on that, you've got market structure shift the market structure, and that's going to start delivering price bearish. That is my journal of trades that I wish to share with you. All right, let's change direction here and look at the scorecards and look at our accounts. So we will change. Where am I here? Oh, good. We will present something else. We're going to go to here. All right. Struggle is real. The struggle is real. All right, let's look at accounts. Not that one. Not that one yet. Let's look at scorecard. Okay. We're that one here. All right, here's a scorecard. And I kind of went over the reasons why. Do notice that I've set my max contracts to a limit of 2. I think I still need to slow my roll. I'm an aggressive trader. That is in my blood. I'm very aggressive. So having to not be aggressive right now is showing me some restraint or teaching me some restraint. So what I really need to move to is going in with a 1, and if I see an opportunity to scale in, scale in. But I need to be high enough in profit that I can afford it if price moves back on me and stops me out in profit. So you don't want to scale in and all of a sudden you're taking more drawdown when you could have minimized or mitigated your risk before. Okay, so let's look at speed up here. Let's look at the scorecard. Dub all week. Now, where I gave myself L's were on market structure analysis, and I was in a range. And I was not. On this one here, I was in shorts / neutral. But the analysis said look for shorts. But I didn't really do a good job. And so between not really reading market structure well and not handling risk management, I barely got through that day. On Tuesday, dove straight across. Yeah, I think I took 2 trades, won them both, and looked at the manipulative thing starting to get into the picture, and I was like, why ruin a day? Cut it off. Just cut bait. Then on Wednesday, I'm struggling with buys, had to be patient for the best short setup, found it, and I did pretty good there. The risk management, I think what I did was I went in with a 2 instead of a 1 contract, got aggressive, and it didn't work out for me. Today, I'm really happy with today. Out of these trades that I took, I did pretty good. I had a trade at 4:15. I stayed in that trade an hour. I scaled up. I started out with 2 contracts. And this was on, I had already been locked out on my personal account, but I went on and traded a challenge. So I started out with 2 contracts. I scaled up 2 more right in the area where NASDAQ likes to take out a fair value gap. Right before, in fact, let me see if I can show you that. Because I was on my stuff. That's not the one. Let's see if this is it. Yeah, this is it. I don't know why I didn't show y'all this one. This one was okay. Well, you can see it here. All right, so I started out with 2 contracts. Let's see. Start out with 2 contracts. Right about here. Okay. I don't know what happened here. I guess it had a pullback, but it didn't pull me out because I think the zone, back of the zone was here, and it was, you had all these. Ooh, I think, no, I can't even do it. I'm sorry that it's too small, but you had a lot. Try to look at where my cursor is. I know it's small. You had a lot of attempts to take out this bottom. So that's where I was hiding. I was tucked back there. Price came back really hard, did a liquidity grab, okay, and then headed back up. So I was like, okay, I hated that. I was really anxious. I really hated that. And this is creating market structure shifts. So I'm like, another one. But it bounced back. Stay believing. So it moved up and it created this fair value gap. And I know NASDAQ loves fair value gap. So I ended 2 more contracts. And it moved, and it was right about here. And it moved up, closed the fair value gap, and I took 3 off. I was like, give me my money. And then it went up, and I had 1 contract. It started coming back on me, so I just closed. But yeah, every once in a while, I get one, and a good one. So it felt good to slap NASDAQ today for a change. I mean, it slapped a lot lately. I slapped back today on that trade. So anyway, let's look at where the accounts are. Here are the accounts, okay? Here's my personal account on the left. And as you can see, I dug that serious hole. I'm still alive, barely. Life support is what I would call it. But I ain't dead yet. You know, happens, it happens. So that's there. And then here are the challenges. I'm trying to get the nose up. So that's the story on that. Now, my win-loss ratio is creeping to the winning side, okay? I'm at 55%. Now, in the beginning, my losses were like, 70%. I was struggling. The problem with my losses is that my losers are bigger than my winners due to the prior week's tilting, mindset, and risk management. I hit and dug deeper holes with my max drawdowns. Had I not done that, I would have been with me increasing my win ratio. I'd be looking pretty decent right now. So that is my journal, and that's what's going on. Good news, my accountability partner passed his challenge today. I am so excited and fired up for him. It is awesome. So I said, hey man, I love that you passed your challenge. But what I even love more is that we got to get you on a podcast and talk about it. It would be an inspiration to people. It will help with your mindset. We've been accountability partners for about a couple of years now. We've been through some stuff together. And if you have an accountability partner, one of the key most important things is that you're honest with them. Got to be honest, because they can't help you if you're hiding flaws or stuff that you mess up on. You got to bare your soul. You got to be honest with them. Now, one thing that we don't do is talk about strategy. I've never talked about to him how he takes his trades. He kind of knows how I take mine, but we have our own way of looking at the charts. We have our own way of taking trades. We don't mess with that. What we talk about with each other is, I messed up today, man. I tilted, and I got it, and we walk through those things and talk through those things. And so he passed his challenge today. I can tell a big difference in his approach to trading right now. He has made some changes. I want to get him on MOG Trades, and I want to talk to him. I want to say, hey, talk us through. And he's even taking off some time before he actually starts trading his funded account. A lot of times what I used to do is I would pass one day and then jump in that thing and then lose it the next day. So, his patience level has just expanded. And I truly believe that patience can give you edge if you use it with market structure. That's it for today. Thanks for watching. Look for us next week. There's going to be some good stuff next week. Take care. Let's go.